I'm not looking forward to this because I might lose more than $1 million if President Joe Biden's new tax plan gets enacted. And this actually affects not just the wealthiest people like we're told, but actually everyone invested in the markets. So it doesn't matter whether you have stocks, crypto, real estate, there's a good chance that you'll probably end up losing some money. Because here's the thing, some people think that by increasing taxes, this actually forces people to sell all of their investments and exit the market before these new tax changes take place, which would obviously decrease the value of the market. That makes sense. But other people think that this will actually increase the market value because it forces people to think more long-term and not sell their investments until much later. Because remember, you don't actually lose money until you go to sell, is what I keep telling myself after buying Coinbase on day one. So anyway, let's talk about exactly what all of this means because it's pretty complicated. Doing taxes in this country is as complicated as this card trick because it's like shuffling a deck of cards every possible way. We mix it up, right side up, front to back. Cards are mixed up every which way. You got front to back to front, back to back, front to front. So in this video, I'm gonna try to make everything right side up and make sense for everybody because I'm not a cheesy card magician. Let's start. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the taxes. Said no one ever. Real talk, making YouTube videos about taxes is very hard because taxes are boring and each person's tax situation is gonna be very different from person to person. And at the end of the day, I don't think anyone has ever looked on YouTube how to do taxes online. It's not a thing. But President Joe Biden's new tax proposal is really going to affect a lot of people, not just the richest, wealthiest, most unrelatable people on YouTube. And personally, I have no problem with paying more taxes. I think taxes are an important function of society, and I'm lucky to even be in a position where I have to pay more taxes. I'm very privileged, and I need to pay my fair share. But what is a fair share? Vsauce, Michael here. It never gets old. This is gonna blow your mind. They did a study back in 2018 where they looked at people earning money and they looked at the top 1%, which was anyone making more than $540,000 a year, which is a ton of money. Those people represented 21% of all the earned income, but they also paid 40% of all the federal income taxes in 2018. So now let's zoom out and include a little bit more people. The top 10%, which is anyone earning more than $145,000 a year, which by any standard is also a lot of money. That 10% earned 48% of all the income in 2018. And that doesn't sound fair. 10% earning basically half of all the earned income? Not fair. Until you realize that top 10% also paid 71% of all the federal income taxes. So rich people actually do pay more in taxes, which begs the question, why was there this rumor that got started about rich people not paying their fair share? Here's the real answer to that question. A lot of the wealthiest people in this world make most of their income not from the active jobs they work, like a 9-to-5 like we do. Well, I mean, I don't have a 9-to-5, I have a YouTube channel, but if I stopped, I would starve, so it's kind of the same. But they make their money from the interest on their investments or from the sale of their assets like stocks, crypto, or real estate. And it turns out that those investment sales or the interest gets taxed at a favorable rate. It gets taxed at a cheaper rate, and that's called the capital gains taxes. But as far as their actual job that they get from being a CEO, a CFO, or a UFO, or whatever it is they do on a day-to-day basis, that income does get taxed at a much higher rate. So the rich do pay more in taxes. It just turns out that most of them make most of that money from the interest on their investments, not from their active jobs. And this is true for anyone probably watching this YouTube channel too. There's a good chance that your overall net worth is actually much greater than the income you make from your job. As far as how much money you have invested in real estate, crypto, or stocks, that's probably larger than what you make per year. And if it's big enough, the interest on those investments would exceed what you make per year, and you would also pay less in taxes on those capital gains. So it makes sense why this rumor got started in the first first place. The most interesting part about the myth that the rich don't pay their fair share to me is that there's nothing inherently special about being rich that gives them favorable taxes. This applies to literally anyone who chooses to live like the rich do, which is to be an investor. If you can live below your means, save that money, and invest it into assets like stocks, real estate, crypto, you can live like the rich do and get those same tax rates. That was part of the American dream. But now we gotta wake up. I'm so sorry, that's probably the most stress-inducing sound effect on the internet. I'm sorry. So one of the biggest changes that people are afraid of is a change to something called the long-term capital gains rate, because it's gonna go up from 20% to essentially double that, 39.6%. If you add in the Medicare surtax of 3.8%, we get 43.4%, not even counting state income taxes. And the worst part about it is the IRS could make it retroactive, which means they could go back to years we already paid taxes on and force us to pay even more in taxes. Now, I'm really embarrassed to admit this next part. I didn't understand until I was like 25. I'm 58 now. But let's say you have $100 you put into a stock, it 10x's, you're a thousandaire, but now you want to sell it all, right? Well, two things would be true. The first, it's not the Coinbase stock. And the second is that you have $1,000 minus your $100 initial investment, leaving you with $900 worth of profit. That is the part you pay taxes on, not the entire $1,000. By the way, this is also true in the opposite direction. If your initial investment of, let's say in this case, $100 becomes worth less, you can actually decrease your taxable income by something like tax loss harvesting, which is a separate video. But let's use this scenario. Let's imagine you have Dogecoin and you've held it for more than a year. Your portfolio is worth $1 million. Flashbacks. Let's say you want to sell all of it, right? Well, the first $40,400 of that profit would actually be taxed at 0%, assuming that that's all you made that year and that you've held it for more than a year. Well, that's because marginal tax rates come in, and this is where different levels of profit get taxed at different rates. And this is what's really funny, and I'm sure you've seen this yourself. Some people think that if they make $40,401, that they're gonna pay an extra 15% on all the income that they've made before. And I'm sure you've seen these people before because they will refuse to take on any extra work. They'll refuse a job promotion because they're afraid that by bumping themselves up to the next tax bracket, that they're gonna pay that 15% on everything they've earned before just because of that $1. But the truth is, they're gonna pay 15% on that extra dollar, which is 15 cents. And that's marginal tax rates, because the next tax bracket between $40,401 and $445,850, that's what gets taxed at 15%. And anything above that, that gets taxed at 20%. Again, that's the marginal tax rates, and that's how it works. But then there's a different thing, which is why my friend Pro the Doge here is holding on to his Dogecoin, and that's the difference between short-term and long-term capital gains taxes, and here's quickly what that means. Short-term capital gains taxes are when you hold an investment for less than a year. Those are taxed at much higher rates because they are treated like our income rates, and our incomes are taxed at higher rates than capital gains rates. This is why there's an incentive to be an investor in the economy rather than just somebody who works. You want to be an investor, and this is also to incentivize long-term investing because you get those better rates than short-term capital gains rates when you just gamble and short-term day trade, which there are some people that make a lot of money doing that, but generally speaking, most people end up losing money doing it that way. So it's better to be a long-term investor and get those better tax rates. Taxes are never easy or straightforward, and this is why collectibles are taxed at also different rates. So Pokemon, Pez dispensers, coins, whatever people collect, generally are taxed at 28%, not the 20% on long-term capital gains, which means that if the government decides to treat something like Bitcoin or NFTs as collectibles, we'd actually end up paying more in taxes. But shh, let's not give the government any ideas here, but all of that is going to change. Maybe, probably, most likely. We don't know yet. So with this new proposal, if you're selling or making over $1 million worth of assets, and it doesn't matter what they are, whether it's crypto, real estate, or stocks, you're gonna end up paying the new 39.6% rate. So if you don't wanna pay more money in taxes, the answer is really straightforward. don't make more than $1 million. Easy. Who cares if the rich people have to pay more money? Who does this actually affect? And that's a really good question, because the truth is, President Joe Biden doesn't just want to increase capital gains taxes. He also wants to increase income taxes and corporate taxes. And the thing about increasing taxes is the truth is a lot more nuanced than just saying, we're going to tax the rich, because that has ripple consequences throughout the entire economy. So let me give you my personal thoughts as far as how I think this will actually affect people regardless of their incomes if they're invested in the markets, which if you're watching my YouTube channel, you probably are, you nerd. When it comes to income taxes going up from 37 to 39.6%, it's not going to change anything. Any rich person can be able to afford to pay that. The extra 2.6% is meaningless, nobody cares. But when it comes to capital gains taxes, here's how that would affect somebody like me. If I sold all of my stocks, and let's say they're worth a little over $1 million, and I sold everything I had in my crypto portfolio, and if I lived in a state like California where we have high state income taxes of 12.3%, there's a good chance that I could end up losing something like $1 million. And here's what that means for the markets. The first thing is, I would have to pump out a lot more videos, which is annoying and you wouldn't want that. But the second thing that it would affect is it would obviously scare a lot of investors, which is exactly what we've seen in April. These tax increase talks are in the spotlight again, people are getting scared and they leave the market drops because people are trying to front run the problem by selling everything before these new tax changes take place. Here's another thing that happens next. In the short term, the markets drop. In the long term, they recover, everyone's happy, and the government gets to keep more money for itself. That's the most straightforward, simplest answer. But the only problem is the government anticipates to raise billions of dollars over the next 10 to 15 years by doing this. But the truth is, there's research, which I'll link down below, that shows that anytime the governments have increased capital gains taxes, that they've actually made less revenue. That makes perfect sense, because if you charge people more money for investing or for anything, then you incentivize people less to do the thing you're charging them more money to do. That's the only problem. So that's the risk. That's capital gains taxes. But then we have an increase to corporate taxes, and here's what that means. This is probably the single biggest change to the entire tax plan that I think is going to affect all of us, regardless of how much money we make. By increasing corporate tax rates, it forces companies to pass on those costs to the consumers. Because if you had a company and you were operating and the government's like, we want more money, you're like, where am I going to get that money from? You're going to increase the cost of your products. It's not rocket science. It's super simple. It's very straightforward. Unless you were a tech company and you already had a high margin on your profits, you already had a ton of cash on the balance sheet, and you wanted to stay competitive, in which case you might weather the storm and not increase prices. But let's say you owned a small restaurant where your margins were already razor thin. What do? You have no choice but to increase those costs, which obviously affects all the consumers going to those restaurants. Now, how much the prices are going to go up? We're gonna have to wait and see, because this is just still a proposal. It still has to pass the House and the Senate, and we're gonna see. But for now, it's just an idea. Either way, I just wish the government could make it very simple and transparent. I wish that the taxpayers could have more of a hands-on role in deciding how that money gets spent. I know that's supposed to be in who we elect as officials and representatives in the government, but I just wish we had more of a hands-on role on the blockchain. That way we can actually see and track where that money goes, how it's being spent, and maybe we could vote for which programs get the most funding. That's what makes the most sense to me, but I'd love to hear your thoughts. Is this a good thing? Is this a bad thing? How is this gonna affect your stonkfolio? Don't forget to grab up to $250 worth of free Bitcoin using this BlockFi link right here, blockfi.com/Andre. Once you've done that, go get 2 free stocks with Webull using the link down below. If you deposit $100, you can get up to 2 free stocks, each of which can be valued up to $1,850. And once you get them, go track them automatically with my spreadsheet, link down below in my Patreon. Love you, thank you so much for watching, and if you haven't already, go check out Millennial Money. It's a podcast I do with my friends Graham, Kevin, and Jeremy. We post on Tuesdays at 6 p.m. Pacific. Thank you so much for watching again. I'll see you soon. Bye-bye.